Now let's talk about how we gauge these types of reactions. Now I want to be able to break this down into basically three phases. So if you're looking at a strong uptrend and you're looking for opportunities to get in, you should be looking for what is known as retracement swings. What does that mean? Retracements are minor corrections. These are pullbacks in prices where you will see that prices will only go back maybe through your 20 or 50-day EMAs. So if you look at the example that I have here, here's an example of a very strong stock. This was DNL before, and it was going very, very strongly on the upside. And look, every once in a while, it'll back off to the purple line. This is the 50-day moving average. And after doing that, then it darts up right away. Consolidates, comes closer to the 50-day, pushes up right away. Corrects back to it, pushes up right away. And then you've got these minor breaks. And here's where you see when those breaks come in, normally, remember, when a trend change comes, remember there are three trends, not two. So just because an uptrend breaks a trend line or breaks a moving average, it does not automatically follow that it will go down, because there's another trend it can do, and which means it could go sideways. Okay, so just understand that. So when you get a moving average break or a trend line break, your uptrend switches, but it could switch from either a sideways market or to a downward one. And you have to let it give you some time to acknowledge that. But since you're looking to be able to jump into the bandwagon here, as an uptrend is quite forceful, you will wait for these pullbacks to the 20 or 50-day moving average. A rebound from that area will give you an opportunity to be able to buy it. Now, a reset. Now, reset is a second type of heavier correction. And instead of falling down to the 20 or 50-day, here's where prices will fall all the way back down, maybe to your 200 or even 400-day EMA. Now, the reason I'm pointing that out is because here's an example of Security Bank a few years ago. And again, it was a very forceful during this period. And like we were saying earlier, retracement, 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 buy, buy, buy. And then it shot up incredibly fast, going to an overbought situation. And then look what happened. It just sliced right through the moving average without stopping. And that only tells you that the market perhaps had phased its buying effect out, it became exhausted, and prices are now working itself to come back down. The break of that moving average tells us now I got to scope to the next level, let's say 200 and 400 days. And you can see what happens here. It stops close to it, tries to rebound and consolidate, and then another crack takes place and it falls all the way down to your 400-day moving average. Now, what is a reset as compared to retracement? Normally, in a very big trend move, you'll probably find much more retracements rather than resets. Resets come in once in a blue moon. And the reason a reset comes in is because the market has gone up too much. And that overbought condition is not even showing not only in a daily chart, but could also be showing in a weekly chart or maybe even a monthly chart. And that's telling you that there's too many people making money out there. And they're looking for an opportunity to cash in on that profit and drive prices back down. It could also be something could happen to a company that could allow a stumbling block to happen and force it to make a natural correction because of that. Remember, sometimes companies are not going to show you robust earnings all the time. There could be some setbacks. It could be a setback because something in society has taken place that is temporary, and you get these pullbacks in price. So here, for example, what happened in Security Bank, it fell all the way back to your 400-day moving average and then recovered, created a temporary pattern, and then eventually broke out and set itself up right from there. So if you were a medium to long-term type of trader, you'll be looking for opportunities like this to be able to buy back inside. Also, usually after a reset, that is a significant correction already. And that means a downside risk from there are very, very minimal, unless something is wrong, either in the environment or either in the company that might force what is known as a trend change. And we'll talk about that. So a trend change is how we would identify what is known as a reversal. So a reversal is when prices fall even below the 400-day moving average. And all of a sudden, you can see that things turn quite dire in this case. A massive sell-off coming in, breaking through the moving average, consolidating and pitching down all over again. So after that 400-day or maybe even 2 or 400-day moving average breaks, I think you should be very defensive already. You might ask the question, what's going on here? Something more impactful or lengthy might be happening to be able to keep prices into that downtrend. And it's because of that that you pull out. You're more likely you shouldn't be there anymore. And that means you will only come back into the stock after things turn around and they finally show you uptrends once again. And that's why we call it a reversal, because it confirms a change of trend, and that is the reversal prospect that the moving average can confirm to you. And so remember, once a reversal comes in, you're supposed to stay out of that. And you wait for trends to eventually change. Maybe if this eventually punches above these moving averages up here, then I will look at it again for a potential buyback. But then while prices are staying below those moving averages, I will stay away. All right, let's have a look at a sample on how to be able to call up a moving average, and let's try to be able to figure out how to be able to use it here in the case of SM. Okay, so as we're looking at SM investments, we can see a clear uptrend from this area here, and then a downtrend that comes into there. But like I said, it's naked without a moving average, so let's put some. So by clicking the studies, click on moving average. And here you may have to modify some details. So let's put a 20-day, and let's change it to exponential, and let's change the color to this almost green-like color. All right, so this line is a moving average, right? And you can clearly see how prices seem to be in an uptrend, wanting to stand over it. Now let's put another one so we can have another reference point. Let's leave the 50. Let's change it to exponential, and let's leave it. Let's color it the same color, red. Okay, so now I have two moving averages plotted in here. So just by looking at this alone, in an uptrend, as long as prices stand above those two moving averages, I will try to stick with my position or look for an opportunity to buy in these rebounds like this, and then do it the same thing all the way up until one day prices rupture between, let's say, the two moving averages you see, just like you see here and here, right? After the trend change takes place, look what happens. Prices seem to be having a hard time climbing above this moving average. There was an attempt up here, but it fell back right away. Again, you can see the moving averages blocking the upward path again, acting as resistance. And so you can see it can prove to be very, very useful to be able to plot this out automatically. Now I'm going to put one more. Let's put a 400-day moving average, exponential. And let's color this like a darker color. Okay, here we go. So I just wanted to see, here's an example of a reset where prices pulled back all the way up to your 400-day, rebounded, made a higher low right here, and eventually broke its, if you have the trend line here, and now you can see that your moving average is also attempting to show good reading. In fact, if you were to be able to look over here, you can see that the shorter term moving average is crossing the longer term moving average. Plus, you're seeing prices demonstrate a breakout condition from the pattern that you see over here after a viable decline. And that tells you that this market should be ready to move. It's corrected enough. All the people who wanted to sell are probably out. It's prepared itself with a nice setup pattern, a small rectangular pattern. The moving average over here is telling you that it's finally moving back into an uptrend, and you should have been participating in a buy over this range. So here's a very useful aspect of how to be able to use those moving averages. And maybe, something like this, you could just stay out for the meantime. Also, look at this area here. If some of you were just going to use the price to be able to buy above the moving average, this is why the crossover system sometimes can be very useful. Although the price crossed over, the moving average did not cross over the longer term moving average. And here's where sometimes it could help prevent you from buying too early. So if this would have crossed over, similar to what you've seen here, then gives you a much more timely entry, telling you that all the pieces are in place for this to be able to turn around. And so if you notice, even the slight breakout over here from this moving average, it was not confirmed by this moving average below it. And it's because of that I would not have gotten fooled to buying this, because this did not give me a proper setup. So take advantage of what this can offer you, because moving average can be quite useful. You plot it immediately, and they become readily available for your use immediately.